All right, welcome everyone, and good day to everyone tuning in Europe, and good morning to our friends across the pond in the land of the free, the United States. How many of you are from the States in here? Let me know in the comment section. I want to know how many of you are from Europe as well. That would be nice to see the split. Pretty sure most of you are from Europe, because if you're trading and you're in the US, you're probably sleeping right now because you can. Everyone, look at that. We got two of me almost. Yeah. We got Jonathan with an H. When I was born, my mother says, well, actually, my mother asked my brother, like, what are we gonna name him? Let's name him Jonathan. And then he said, but we don't want that weird spelling with the H, so we're going to call him Jonathan without the H. Here we have the man with the weird H in his name. This is Jonathan Kibbler, our new host here within Tradeify, crypto, and the live streams. You're going to be seeing a lot of him. Jonathan has an history of being in the markets for over a decade now, and has been working with as a market analyst for quite some time now, and as a trader. Welcome. Happy to have you on.
No, yeah. Thank you. And I must admit, every time you say your name, Jonathan, you have to like spell your name afterwards, so it is more difficult. I must admit.
Yeah. For me, it's easy. It's like, oh, how do you spell that? It says without the H, and they're like, oh yeah, okay. Yeah. And then we have Ayush as well, which is also has an H in the name. Yeah. Ayush. It's also in the silent H there. Yeah. Okay. We got what do we have today? We got CPI, guys. CPI is it going to move the markets? Probably not. I think what's going to move the markets, though. You think so?
I don't know. It's an interesting one, isn't it? I think
very interesting.
We've got a very big day, I guess. It's with Fed Walsh testifying as well. I think it's obviously the first time he's done that. It's just an interesting day where you've got so many catalysts just coming together for one big day. Obviously you've got the geopolitical tensions as well on top of it all. So I think it's one of two ways, isn't it? Either everyone's going to just try and follow what Trump's saying, or it's going to be, CPI is going to take a hold. So yeah, I'll be interested to see the reaction. I think we're going to probably have to see a few sort of deviations from the expectations to see a big move. But yeah, I'm looking forward to it.
I feel like I said, either people are just going to be following whatever Trump says, or they're going to be looking at the Fed's expectations of hikes. But I kind of feel like the market is pricing in the craziness of Trump's tweets, right? Because the whipsaw. I mean, I can pull up a shot of Brent, as you guys know, the global benchmark here for oil, and the whipsaw that we saw, like here, like I mean, this is daily range on oil of 20, almost 28%. And we had this insane whipsaws, and because of the same situation we have now, just going back and forth. So I do feel like the volatility caused by the, I guess, unpredictability of the situation in the Middle East is kind of, volatility is decreasing a little bit from that, right? But I think the expectations, the rate hike or rate cut expectations from the traders looking at the Fed is the big one here, because most people, I think, if we go to a prediction market like Polymarket or Calci, you're probably going to see that a vast majority of people, maybe Ayush, you could do that. If do you know Calci or Polymarket?
Yep.
Could you, Ayush, could you look that up? What the what the odds? What are they pricing in a Fed rate hike this year? That would be interesting to know, because I would assume that it's very high. Because of the last press conference, right? But then you kind of look at what he said. It's like, we're gonna keep we're gonna focus on inflation. We're gonna keep inflation under control, and then at the same time looking into other forms of measuring inflation. So maybe that task force that he's gonna set into motion, maybe they come out and say, hey, you know what? Inflation is actually not that high. So there's so many things that could happen here that would just completely flip that. And then I'm also thinking, what if they do one rate hike to create a scenario where they need to cut?
Potentially. I'm going to be on the fading side of this. I actually think they won't cut. They won't hike rates. Sorry, I don't think they will. I think at the start of the year it was all about them sort of at least doing 2 or 3 cuts. Didn't expect that to happen either. Slowly but surely the market has started to price those out, and now it's in the state of, we're going to hike rates. But it's largely it's down to this recent supply shock in oil prices that they're seeing that headline CPI rise, all that kind of stuff. But I'm really keeping an eye on the core measure today, keeping an eye on the PCE index as well going forward. I want to see where the demand is. That's what it all comes down to, really. Is there demand in the market? And is it persistent enough for them to hike interest rates? And Warsh's comments are very hawkish in tone. That's why we saw that jump in the dollar, right? That's why we saw or why we're seeing US yields rally so much as well. It's because they are hawkish in tone, saying he wants to drive that inflation rate back down to that target range. But if we look at the forecast going forward, I think when I was looking at the CME Fed Watch tool earlier, it was a 41% chance that they were going to potentially hike interest rates on the 29th of July, which has gone up massively from, I think it was 20% last week. So we're seeing huge changes there. I mean, I'm also kind of just watching the 2-year yields as well, because I think if today we get a CPI that comes in a lot lower than expectations, a core CPI that comes in a lot lower as well, I want to see how those yields react. I think if the bond market agrees and we see yields drop, then I want to be on the short side of the dollar. But I think everyone's expecting this hike now. And when people do that, I like to be on the other side. I like to just be a little bit more of a fader of that move, going against the crowd.
Yeah, I went with that strategy in the World Cup. I basically I put the money towards the ones with the best odds. And it went very well with Norway, but then obviously it didn't go so well after that. I went all. I mean, the only match where I can reverse that was the England-Norway match, where I put all my money on England winning, and then
nice.
I put all the money on them winning at 90 minutes. And it got so they won, and I lost all my money. It's like having the perfect trade where you get stopped out and then it hits TP.
That is perfect. Yeah. Well, I mean, I wish it didn't go to extra time, because it was so late over here, and I was so tired. Yeah. I was praying it not to go to penalties. I was like, please don't. I want to go to bed.
No, that was a late one for sure. So you're actually thinking like, technically, I really like where where the dollar is for more upside. Like if we take out all the fundamentals here, I would think that the dollar might actually have created a bottom here, but it's so difficult because, and I've said this for such a long time, because I've been looking at the dollar here all of this year, and I've said, okay, this looks to me like a bottom.
Mm-hmm.
If the dollar is going to bottom out this year, it's going to be here. But then there has never really been a clear macro trend for the dollar to trade higher for a very long time. And the same thing for now, because like if I look at Polar market, for example, we get a 66% chance of a rate hike, but I feel like 66% is still not super high, considering after the meeting we had like 70 or 75% or something like that. So yeah, it's a bit difficult, because I think they don't have too much room to hike, you know. And I'm starting to think, just like you, that a rate cut is definitely something that might happen sooner rather than later, and that obviously that would push the dollar lower. So from a technical point of view, I do think the dollar looks like it's putting in a long-term bottom here. And if that's the case, then assets like Bitcoin would be, you know, just going down way more than it has done in this bear market. And I'd like to put this on where we're comparing the Dixie versus Bitcoin. And even though we need to understand that, you know, correlation does not equal causation, this might not hold, but we do see, of course, when the dollar puts in the bottom, that's usually going to be high for risk assets. That's usually going to be at least a temporarily high for the stock market. And if we compare Bitcoin and the dollar, it's a relationship that has been playing out ever since the inception of Bitcoin. And I think also Bitcoin is a really good way of looking at global liquidity. And I'm not really sure if it's true now, because I believe Bitcoin it hasn't changed fundamentally, but it's trading in a different world where AI is just taking over everything. So it's a difficult situation, but
well, I think you're right. I think it's almost like the hype is kind of moving away a little bit, isn't it, from Bitcoin? The hype is now in AI sort of sectors where, you know, if we were looking at it 2 years ago or whatever, it was all like, all the headlines were Bitcoin is rallying because of the, you know, risk on in the markets, and, you know, the fear and greed index was pointing at extreme greed, and it was all, you know, everyone was piling that extra capital there. Whereas like now it's all more about, okay, what's Nvidia doing? You know, what are the other tech stocks doing? What are, you know, some of the semiconductors doing and things like that, versus, you know, okay, well, what's the mood in Bitcoin or whatever. I think it just kind of shows me that there is a lack of sort of, you know, I guess a lack of greed in that sense, a lack of conviction with something like Bitcoin. I think they still, you can obviously talk about S&P 500 making all-time highs and all the NASDAQ and all this kind of stuff, but those are, I guess, assets that are more trusted. They've been around a lot longer. They've obviously have a little bit more to them versus the likes of Bitcoin, which is a lot younger. So I think when people have spare capital now, it's not necessarily going into Bitcoin at the minute. It's going more into traditional stocks versus crypto assets. But when you see crypto taking off, that's when you know you're in a real kind of bull market at that point, and that's where you can try and take advantage of those type of moves for sure.
Yeah, and I'm starting to think also. I'm starting to, question the idea that, I mean, when everyone was piling into Bitcoin and Bitcoin was all the hype, I think everyone kind of understood that, well, that's not going to last forever. Bitcoin is never going to be the new and exciting thing, obviously. But then you look at AI, and I'm like, well, AI is probably not going to go away anytime soon. It's going to stay for a while, right? Longer than the interest in Bitcoin, So I'm wondering how much of the liquidity and the interest from the general public will be, like, how long will that interest be in AI? And I mean, that's also one of the reasons why at Tradeify Crypto, we're looking more into not just crypto, not just Bitcoin, but actually like tokenized assets, because I do feel as well that the hype around Bitcoin and the hype around blockchain, it's no longer really about Bitcoin and crypto. It's more about the blockchain technology. We see NASDAQ going to 24/5 trading, using blockchain technology. You have exchanges, decentralized exchanges like Hyperliquid, launching an officially licensed S&P 500 perpetual future contract that you can trade 24/7 on Hyperliquid. So it's kind of like the whole crypto industry and the whole hype within crypto, I feel, is going in that direction. And I honestly feel like Bitcoin, and I'm not saying this just because we're in the bear market, right? but I feel like Bitcoin might actually be losing some of its fundamental value here, right? Because with AI, we might actually have better alternatives. Because what is Bitcoin? Bitcoin is meant to be money. It's meant to be money. It's meant to be a better version of money than fiat. And I think with AI, everything's just going to be different.
No, definitely, for sure. Interesting to see how it plays out. I wonder if there is a rotation out of AI when AI starts not making much money and we start seeing a big, huge sort of drop in those stocks, whether we get a rotation into crypto from that. That would be quite interesting to see.
I think when we get a rotation from AI, that's going to be the bubble bursting for everything. That's going to be Bitcoin crashing even more. That's going to be the everything bubble crashing, because if you remove capital from AI, what's left,
Nothing.
I mean, what are you going to invest in? There needs to be
Defense
something
stocks.
else. Yeah. Yeah.
But that's it. Who's building the rockets? Let's go there.
Yeah, of course. That's probably going to be the future. Yeah. We have Glenn in the comment section. Actually, no. Who said that? Someone said something about mining. Yeah, someone called something I can't pronounce. Yermur, maybe, saying mining shifted to AI. That's also one important piece of information here within crypto, is that most of the big crypto miners have shifted to instead of using the warehouses, etc., to mine Bitcoin, they are now shifted all their mining equipment to AI and is now renting out the storage facilities and all the warehouses to house AI-related data centers instead, simply because they're making so much more money on that compared to Bitcoin mining. So yeah.
Well, you go to where the money is.
Yeah, that's right. Okay, so we got CPI coming up in, what is it, 10 minutes? Yeah, interesting. What are we thinking here?
So I think on the Bitcoin, I think we are still taking support at the level which we are looking at yesterday, Jonathan. So it's like again going higher in the range to be comfortable, and Ethereum not really looking good for bears right now. So it is again back with the strength of bulls. So I feel that we might be, if we somehow manage to close above this range, then we'll have much more clarity about the trend currently. But I feel for the intraday trades, if we, I think the setup you explained yesterday is still going to play out today. If we somehow manage to close above this area, we might see price going higher to near this range, which I always use as magnet. So for me, if we somehow manage to close above this resistance, maybe intraday resistance, then we can see this price at we can see Bitcoin at 64,000 again, maybe during CPI. And Ethereum is much more stronger than Bitcoin, so I would prefer going long on this pair than Bitcoin. So that's my take before CPI. And to be honest, Ethereum looks much more stronger than Bitcoin. I would like to know your view, Jonathan, with the edge.
It's a difficult one, isn't it? I mean, I must admit, I've not traded a lot of crypto in a while, to be honest. I'm a bit more of a traditionalist in that sense, so I'll follow Bitcoin a little bit and whatnot. And you know, we are clearly sort of trending down right now, which is no surprise at the moment, I don't think. But I just think at the moment the market is not necessarily focused here, but it will obviously have a little bit of an impact, because I think I was looking the other day as well, and I saw that you've heard, I'm assuming everyone heard of strategy here, right? MicroStrategy.
Yeah.
With Mr. Saylor. I actually did a video, like, must have been over a year ago, saying that he might be struggling soon. And he's now started to announce that they're selling Bitcoin and things like that. And I just think, like, when people like that have been so devoted to kind of buying it all the time start to come through and then start selling it and things like that, and they become a little bit worried, you know, that to me can be a big tell, because their business model essentially relies on this asset doing really well. So they have got to be in the know. They have got probably loads of analysts behind the scene trying to figure things out. What are the expectations of this? What are the expectations of that? What could we expect? So they must have analysts behind the scenes kind of trying to figure out, are the Fed going to hike interest rates? What are those things that the Fed's going to be looking for? How is that going to impact, you know, these type of markets going forward? So yeah, I think if we get a stronger CPI today, I think obviously that will add to the weight on Bitcoin at the moment, and we'll probably see prices continue lower. I still expect Bitcoin to be around about $54,000 at some point before we see any kind of movement in the future. I mean, at one point I was very bearish Bitcoin. I was talking about seeing it at least down to the 20K, and I think if it does get down there, that would be an insane thing to happen. But for me, I think, you know, I'm still firmly on the bearish side of this, especially in the short term. You know, looking at this kind of like 4-hour just setup here at the moment, we're starting to kind of consolidate around that 64K mark. I think any breaks below these lows, I think would be met with further sort of selling pressure, and I'd be happy to look for some downside, perhaps into the sort of 58K lows first, and beyond that. So, I mean, we'll see. You know, I was trying to ask myself the question, do I want to be a buyer right now, or do I want to be a seller right now? What are the sort of tick boxes that I need to put in favor? What are the conditions around the market? And I think for me, conditions still very much point bearish. There was a point where I thought that was changing. I actually was long Bitcoin around here for a short period.
What are you doing, Ayush? What was that sound, Ayush? What are you doing?
I threw something to do for my brother to catch it, but he missed it.
But he had a poor catch.
Mate, wait, let me clarify this. Did you throw something at your mother or to your mother?
No, I said brother, not my.
Oh, brother.
He wanted.
Yeah.
Oh, nothing. I just threw something at my mother.
Ayush was like, I don't like this analysis right now. I'm going to throw something just to make it interrupt.
It's interesting that you brought up strategy. It's been a big talking point within the community that strategy started selling Bitcoin for the first time ever. Basically the whole idea with strategy, formerly called MicroStrategy, Michael Saylor, the whole idea was to just buy Bitcoin, buy as much of it as often as possible. Is buy. I'm gonna look into the details of that, because as far as I understand, it's not just about buying Bitcoin. That there is sort of a strategy behind it. Now, I'm not sure if that strategy is just to make it sound nice, but all they're doing is actually selling Bitcoin because they might have a bearish reason to do so, or they're selling Bitcoin to like accumulate more Bitcoin. I don't really get it, but there's supposed to be some type of strategy behind all of that. But yeah, I'm definitely with you on Bitcoin being in a bear market. There's like no question about it. And if we're looking at Bitcoin here, it's kind of like, as a swing trader, there's not much to do here, not much to do. I had my trade, up here around the 80 level, and then we went down to the lows, closed that one, and now for me it's just a waiting game. It's just like you said, you ask yourself, do I want to be a buyer or a seller here? Well, if you can't answer that question, then you're just going to be staying out, right? I think a lot of people, they ask themselves that question, do I want to go long or do I want to go short? And they need an answer, right? But it's most of the time you're not going to have an answer to that. And I think that's what trading is all about. You have to accept that most of the time, you're not going to be in a trade. You're not going to be in a position. And I think too many people are just of the impression that you need to be in a position. You need to be in a trade because otherwise you're not making money.
Sometimes the best trade can be not trading.
Yeah, absolutely. Absolutely. Okay, we got CPI coming out in 4 minutes. Okay, so what? 3 minutes. Okay, so what market should we be watching? I'm probably thinking EU. Yeah, it's probably the one to watch. So let's go. I want to go down to the 50-minute to see what. Yeah, we're getting a breakout here in the lower time frames. It would be hilarious if we get a pump here. Like I'd love when you see EU start moving in one direction, like a couple of minutes before the CPI. It's almost like, do people know something? You know what I mean? It's not.
Yeah, it's almost like they're pre-preparing themselves for something, aren't they? So they try and pump up the market a little bit beforehand. Yeah, it's actually quite funny. From when you watch markets for so long, you start to see that little bit of intuition, don't you? Where you start seeing that little rally before the move. Interesting to watch. I'm going to be watching to see how far away from the deviations we get, if we do get away from the deviations. Especially from sort of like the core side, like I said earlier, if we get like a minimum side is 2.8%, max is 3%. So if we get anything below 2.8%, that could be bearish US dollars. If we get anything sort of significantly below that forecast, I think anything like 2.7, 2.6, I think that could be something that then the dollar weakness will be sustained. But yeah, on top of that, I'll just be watching these yield charts. I think once we start to see yields go, then we usually see the flow into actual US dollars as well. So it's almost like the bond market confirms what you need to see before you then get involved. I don't know if anybody's gold traders here as well, but a lot of people have been trying to buy gold because of the geopolitical tensions, but that is not really good essentially, because yields have been rising and gold reacts more to yields than it does to sort of the geopolitical tension. You can go look back at 2022 when the Ukraine and Russia thing kicked off as well. So yeah, I mean, if you're going to be looking at something, I'd be looking at yields just to see if the bond market confirms what the data is, and then we can have a little look.
Yep, would be interesting to dive into those numbers. Okay, we got EU. Let's see. I'm gonna
30 seconds.
Pull up 2 charts here just to see if there's any movements at all on Bitcoin. By the way, for gold, we do have tokenized gold here. So we have a few people trading gold. I know Anastasia as well is very much into trading gold. So I'm gonna go to the 15-minute here on both. They've been very correlated, EU, and oh right, we're getting a, oh wow, look at that. That's a big move on EU.
Gold is just flying.
Gold as well?
Yeah.
All right, it's lower than expected.
So we had a core inflation rate 2.6%. We had an inflation rate year on year 3.5%. So it was a surprise move. Core inflation rate month on month 0% versus 0.2% forecast, and inflation rate minus 0.4%. So actually some decent surprises here to the downside. I said anything below 2.8%, that 2.6% range would be pretty bearish US dollars. So you're starting to see that dollar reaction there now. Get yields as well. Seeing yields fall a little bit. I do have a little alert down here because I want to see yields really kind of take this move out. I'll be interested to see where dollar yen is, because I am short dollar yen right now up at the 162.60s. So I'm hoping this one continues to move down. It's dropped twice already, but the swaps are absolutely killing me right now.
Yeah, so I was just going to say that I had to close my USD JPY short. I went short on the 1st of June. And I'm like, yeah, no, I'm not just gonna be paying swaps here. I just held it for I think 1.5 weeks, and then I'm like, nope, I'm not doing this again, because I was in another trade where it's like supposed to be a 3R trade, and yeah, swaps just ate it up.
Yeah, I've been in it for like, wow, when have I been in it since? Well, I took the 162 handle. Yeah, on the 30th of June. So I've been in it a couple of weeks now. And then I took a short at 162.60 when price kind of came back higher. So yeah, it's not that obviously I want it to drop, but it's also becoming a need now because the swaps are just going to keep eating away with it. But I do, I'm looking at this 162 level as more of like, could this be an intervention situation like what we had previously? Obviously the market's in a bit of a different kind of way compared to what we had last time, where we did see that intervention come through, where we had a bit of aggressive moves in dollar yen. So yeah, I'm looking for this kind of, hoping now that this will be the driver and the mood that kind of drives that price lower. Gold reacting from that $4,000 level. Yeah, it'd be interesting to see how this affects gold as well, because we've been we're down quite a lot on gold this year. What is it, 27% or so? And I think we are starting to see a bit of a rotation again, kind of out of gold, where a lot of retail traders trying to shift from being buyers to sellers now, because they think that this move's probably over. But I was looking at something the other day. I was looking at the crossover of the 50 and the 200 moving average here on the daily chart. See if I can actually put it on.
Was it was it a 50? No, which one did you say?
50 and 200. So the 50 crossed below the 200. Now, it then sparked a lot of sort of interest in headlines, media headlines saying, oh, we've got the death cross on gold now, and X, Y, and Z. It's going to now start being a bearish asset. Whereas actually, if you look in history, the last time that we had a bit of a crossover was here, right? Back in October of 2023. actually turned out to be a pretty bullish case. This was obviously a little bit of a similar situation where we are now in terms of yields and inflation expectations and things like that. This was 2022, where we had CPI kind of getting hotter and hotter. And that obviously caused the central banks to hike interest rates. So we saw that drop to the downside there. So that was a bit of a different situation, whereas now we've got inflation cooling and we have a sort of crossover here where many sort of traders think that that's a short. So I actually think, again, you know, maybe fading that move, fading that narrative might not be a bad thing, especially if we can get that backed up, like I said, by the yields. If yields start to drop and continue lower, then, you know, that would be great. I mean, it's boring talking about yields and talking about government debt, but fortunately that's a big driver of markets. So, you know, I'd really like to see sort of a breakout of these yields here. Any kind of break below sort of 4%, I think would be pretty negative for the US dollar. And, you know, that could mean we get that sort of breakout of the 100 spot 50 handle and a little bit of downside from there. Be interested to see actually how Bitcoin did react to that as well. Probably saw a little bit of a jump here coming up into these highs. Whether this narrative will have a longer term impact on the price of Bitcoin, that'll be interesting to have a little look at. Because obviously I think the overall narrative for Bitcoin is bearish. So whether this gives traders an opportunity to be more on the short side, you know, if price can get up into this area here, you have a little bit of a better reward to risk ratio, right? Down to these kind of $58,000 levels versus if you were trying to sell in and around this area here, you can kind of almost double your reward to risk. So I'll see how price reacts at these highs. If we get a rejection, maybe a change of trend on the lower time frame, that might be a good opportunity to maybe try and get in on some Bitcoin short around those levels.
Yeah, I think definitely if we hit some good resistance here on Bitcoin, I would be looking for shorts as well. The what's the ticker you're looking at for the yields? Is that the which is that
that's
the 2 year?
2 year, yeah. So I was just looking at the 2 year, so just the short end.
Right, so let me see. That's the
US O2Y.
US, okay. Do you look at yield spreads?
Yes, yeah. I look at pretty much everything to do with yields, to be honest. Look at global yields, look at the spreads, you know, look at the EU versus the US 10-year yield spreads. I look at a little bit of everything. Look at TIPS as well, which is inflation protected securities, which kind of like shows you your inflation rate minus or your yields minus your inflation, just kind of give you a little bit more of a understanding of that. But yeah, I look at yields probably every single day. They're a big part of my analysis, to be fair.
Okay, so we're looking at the 2 year yield here, the US 2 year yield, and now that's obviously driving the yield of the government bonds, the 2 year dated government bonds, right?
Yeah.
And you're not looking at the 10 year.
Not necessarily right now. I'm just looking at the short end of the curve. So when you look at US 2 year yields and you compare that to sort of the likes of the inflation rate, the interest rates. So the way you can do this, you just go to compare on TradingView and you can just type in US interest rates, just click economy, new price scale, and then I'll just turn these off. Let me just turn all these EMAs off. Let me zoom out a little bit. What you typically see is that obviously the 2-year goes first, and then it's followed by interest rate hikes or cuts. So recently, obviously, we saw as well a little bit of downside in the US 2-year yields. That was then followed by interest rate cuts. So although, the Fed say that they are like looking at sort of inflation, they're looking at growth, they're looking at employment situation and things like that, they are also looking at the bond market and what the bond market expectations are and what they're pricing. And especially Warsh now, because he used to be a hedge fund guy, so he will know all about these yields, and he will be definitely keeping a very close eye on them. But usually when we get quite a decent sort of spread versus the 2-year and the current interest rates, that can obviously be a driver for a lot of currency rotation as well. So I like to keep a look at the 10-year, of course. But when I look at it in terms of like interest rates and where I expect things to be, I like to kind of keep a look at the 2-year. And I also like to look at it compared to sort of the 50 moving average. In history, when we've kind of crossed that 50 moving average and expanded and accelerated, that then again is followed by interest rate hikes. When we start to kind of break down, then it's followed by interest rate cuts. And at the moment, we are above that 50 moving average. So the closer we can get back to that 50 moving average, I think that maybe the dollar will continue to fall. So, for me, I expect almost like yields to come in a little bit lower. I expect maybe a bit more of a move down because, like I said, I think the inflation that we've seen recently is more just driven by that supply shock with the Middle East situation versus the actual demand from the markets. Because when you look at employment figures, NFP consistently over the past, few readings has come in a lot lower. They've even revised it lower. So job creation is not really there either. What really fuels inflation? It's high jobs, higher wages, all that kind of stuff versus, a supply shock in oil, right? So I don't necessarily think the demand is there. And I think that's why we should start to see yields kind of come back and match with current interest rates. And if it does, that's what I'm looking for in terms of bearish US dollars. If we do kind of see that continuation, if that makes sense.
You're on mute, Sensei.
Yeah, sorry, I was muted. Yeah, that makes sense. I have a lot. Well, it does make sense, but I do have a lot to learn when it comes to reading the yield chart.
Yeah, I mean, I used to not know anything about yields, and then I met a guy at a conference, and he was like a big bond trading guy, and I was asking him loads of questions about the market, and he was just like, "Do you know anything about bonds?" And I was like, "No," and he was like, "Just go away, research bonds." And he said, that'll tell you everything you need to know about currency markets. He was like, just your market moves on expectations. Just go and study expectations. And there's a couple of guys that I like to follow. There's one called Brent Donnelly, who's like a big macro trading guy. And he talks about the yield all the time. So when I started hearing those people talk about it, it was almost like, right, I'm going to go research it. How does it impact, the markets, and what does it mean for sort of my positions? And then that led me down the rabbit hole of learning about macroeconomics and all that stuff, and learning about hawkish narratives, dovish narratives from central banks, which then obviously leads on to all these different kind of sort of longer term macro trends and whatnot. But it definitely helps. It definitely helps when it comes to making decisions, because if you know the narrative around something, you can then kind of think about, well, where are we on that narrative? So the way Brent Donnelly likes to talk about it is like acts in a play. And, are you in act 1, act 2, or act 3? Dollar is obviously, this was the Fed decision, right, back in June. And that narrative has stuck for a little bit of a while. But what is that narrative built on? It's built on that inflation's going to be persistent. What if that doesn't happen? Then your narrative's changed slightly. So this was almost like the act 2 And then we had a little bit of Act 3 recently with the geopolitical tension, but now this recent CPI report is kind of wiping that away at the minute. So obviously headline CPI, if we do see geopolitical tensions continue, then headline CPI will move higher because it reacts to oil prices. But that's why I like to keep an eye on core, because core is really like, what is consumers doing essentially? Are they buying products? Is it, is it to do with the fact that employment is good and healthy, or what? So yeah, it's definitely a good thing to kind of keep your eye on. But I'm expecting a little bit of dollar weakness.
Yeah, because it strips out the energy, and what else? Energy and food? No.
Yeah. It just takes out more of those volatile sort of sectors.
Yeah, that makes sense. Sorry, I just have a message here. I'm gonna have to jump off in about 50 minutes. I got a traders interview. We're gonna have it's Tuesday. We're not gonna have Anastasia. It's gonna be you and it's gonna be Ayush and you, Jonathan, here for the second hour, and see if I can jump off after that. Jump on after that interview as well. I just looked at Polymarket. It dropped 10% of the CPI. So we're now looking at a 56% chance of a Fed rate hike in 2026. So it went from 71% after like the highs of 71%, and is now down at 56% after this CPI print. So that's a very interesting development. And if this holds, we're probably going to see the stock market recover quite nicely here. If we look at the S&P 500, I mean, if we look at the weekly, we're pretty much. Let's see if I can get rid of this. I mean, we're pretty much at. Where do I have all of those? Okay, let's get rid of that. And we're pretty much at all-time highs on the higher time frames here. If we look at the weekly, so yes, we're consolidating at the highs here, but it's we had the banks' earning reports coming out, and they are looking insanely good. They're making a lot of money. They're very healthy. So they've finance space, and if I'm not completely mistaken here, in like the financial sector is usually the sector that gets hit first when there's a potential rotation in capital within a market. So when you're on when you're in a risk on environment, the financial sector usually does quite well, and then when it starts shifting, you'll see the financial sector starting to take a hit. And we are seeing right now, we're seeing the CPI numbers coming in lower than expected. We're seeing bank earnings reports looking very, very strong. And we have the stock market very close to all-time highs. I wouldn't be surprised to see a break higher. And I wouldn't be too surprised to see that Fed rate hike chance at below 50 after the committee hearing. Because it might be the case that Fed, like the wars, has a different tone in this hearing, or maybe not. Maybe he wants to,
He might be a lot happier in that meeting now. He might say, actually, we're all good. We're all good. Everything's looking fine now.
Yeah, screw the task force. We don't need them anymore.
Yeah. I've come in and it's worked.
Yeah, no, it's going to be interesting. But it's going to be really interesting to see what's going to come out of the of that task force, because we might see a very different Fed going forward. He talked about not having forward projections, so that's going to be interesting. He didn't add his own dot to the dot plot, for example. So potentially going to be
Is
seeing
he
some
talking
changes.
now, or is it in a little bit? I want to say he might be talking now. I'm not sure.
I'm going to pull up Bloomberg here, see if I can.
I don't know, 3 o'clock apparently. 3 o'clock.
Yeah, right.
I can just see some comments coming from my news score. Let me bring this over.
Luna is in the chat.
It's right, Luna. What's up, Luna? Welcome, Luna.
Jonathan 1 and 2.
Welcome, Luna. Luna, where are you from? I want to know where you're from. Do you know where she's from? Ayush, you probably know.
No, why would I know?
Let me guess. I will guess. She's from Brazil, Portugal. She's Portuguese.
Are we creating our own prediction market here? Is that what we're doing?
Yes.
We're gonna.
Where is Luna from? I think she's Portuguese. That's what I think.
Can we get some clues at least?
Yeah, give me some clues. What part of the world? Let's start with that one. What continent? Is she still here?
No.
She left. She probably left. Okay. Well, I'm glad you joined us for half a second at least. Yeah.
Oh,
hey, Glenn. No, she says, "Hey, Glenn." She's ignoring us. Yep. She's just ignoring us. Yeah, we got Fed Watch testifies. We got it. Yep, it's coming up 16 o'clock here in Sweden. Should be 15 UK time.
So yeah, started to talk a little bit about the labour market in some of these comments that's coming from NewsScore. Saying the Fed is monitoring implications for inflation and labour market. It didn't really discuss labour market before. Saying job creation has kept pace with workforce, unemployment rate is low and has changed little over the past year. Relatively few layoffs. Well, we'll see how the NFP keeps reporting because that just keeps getting revised down and down and down. So we'll see. We'll see.
Yeah, it's gonna be interesting. All right, let's see. So the S&P 500 got sold off pretty heavily on that move. Look at gold. Gold had a really big move. That's so the market is definitely pricing in lower chance of a rate hike here.
Took the entire week, one candle.
Yeah, I think Bitcoin actually starting to look interesting for shorts here. I mean, we talked about this yesterday, and then obviously I talked about how this level would be good for potential longs, but then also we talked about this level which was relatively untested. But the difficulty, at least for me, when I'm trading these lower timeframes, is always, I mean, we know there's always going to be a big chance of having these wicks here that you have these wicks and it looks totally normal on the 4 hour or the higher time frames. I mean, this is the type of price action that you can expect, right? But then if you go in the lower time frames and if you look at the replay tool, you look at this and probably if I would be seeing this live, this is on the 1 hour, right? If I would be seeing this live, I would think that, well, look at that's a beautiful level. It's a retest of that level. It's a big, like, bullish engulfing candle here. I'd like to kind of look for longs here. And then of course we get these moves to the downside, which creates those wicks here on the 4 hour. And I think that makes everything so much more complicated when trading, because then you look at this again. Now that's still a great setup in my opinion. Price comes down, even creates like a type of double bottom here, starts moving higher. So I think that's a good example of why trading is so difficult. You find a good level, and then it's like, yeah, that's a good level, and it is a good level because that's the exact level the price reacted to as support and resistance. But you would then need to have such a wide stop loss if you're going to put it down here. And then it's like, yeah, now it's a 1.5 hour trade or 1.6, which might defeat the purpose depending on your overall all win rate. So even though it's a good level, and you do see from this level Bitcoin they've started moving from this level, but it's just so difficult to not get stopped out sometimes. I guess that's what trading is all about, try not to get stopped out, but it's definitely complicated. It's not easy.
It is.
No, I like where it's at right now.
Yeah. Okay, let's see. Where did we get any clarity on where Luna's from?
No, she totally ignored that. Talking about gigs.
Okay, maybe she's like, she doesn't want to mention that. So let's assume she's Portuguese then.
Maybe Robo can ask her.
I don't know how you come into that assumption.
Yeah. Yeah.
What's the analysis?
Bitcoin is actually continuing higher here. It's a good candle here. Let's look at the S&P 500. Okay. Oh, interesting. That's a good one. I'm glad I didn't take that trade because I would be stopped out. I still think though, Ethereum is screaming short here for me. Yeah, we're getting like a local breakout, but I think definitely like this for potential short. Or what are you thinking, Ayush? Are you thinking long here on Ethereum?
To be honest, it is if the price holds above the previous swing high we have, I think it might. But for that, I use the correlation of Bitcoin as well with the Ethereum. So I want Bitcoin to do that as well, but I don't think so. Ethereum will continue higher because we have a really strong level coming up on Bitcoin that's gonna slow down this thing. So for now, I'm just gonna wait for price to tap on Bitcoin, or maybe at this price level. I'm sure that we might see some bears coming in at the high, and Ethereum will show us bearish signal again. So I'm not bullish on the higher time frame. To be honest, on lower time frame, the long went really nice, as we talked before the NFP, that if we close above this resistance level, the range is gonna be the magnet. So I'm not really bullish on the Ethereum. I think we will continue lower after we see some reaction on Bitcoin first, then it will slow down. But talking about the strength and weakness, Bitcoin is looking really good for shorts and not Ethereum. So if I see some selling opportunity, I would go with Bitcoin, not Ethereum, because it's too strong to take the swing lows which we have on the chart. So yeah, that's my take on both pairs.
Yeah, no, I'm looking at, for me, I'm looking at, I want to get that move up to 65.5. If we can get a move up to 65.5, I would probably want to short Bitcoin up there. I think a lot of people are going to be caught on the wrong side here if we have a local breakout here. If we get above like 64.5 or the 65 region, I think That's where I would be starting to look for shorts. Guys, I gotta jump out. I'll be jumping on as soon as I'm done with this this interview. So I'll catch you guys a little bit later. Okay.
Yeah.
Cool. Have fun.
Bye, Jonathan. Hi, Jonathan.
Yeah, it's no different here for Ayush. It's like...
Roman, you can remove me whenever you're ready.
All right.
Talk to me, Ayush. I want to know exactly how you're trading at the moment. I want to know. I'm interested. This is new. This is new for me. I've obviously we've never met before, so I feel like this is fresh.
Yeah. So I was about to ask the question, but anyways, I'll go first. So I'm more of like, coming from Japanese candlesticks and now trading order flow. So it was like 2 years in the Japanese candlestick, the market structure, but now more of like order flow and the gamma and the stuff like that. So mainly with the volume bubble and the bid and ask kind of, just using a tools and actively trading GC, which we have PAXG with Tradeify Crypto and NQ, and sometime Bitcoin and crypto on the higher time frame. So it's like, for me, it's kind of support and resistance, and I am a lower time frame scalper. I am terrified or maybe terrible trader on the 4 hour, on the 1 hour, because I don't have that patience level as you guys have. So you know what I mean. So yeah, I'm assuming from your analysis, you are mostly more of like a swing trader.
Yeah, I mean, I've dabbled in a bit of both. I actually used to try day trade Euro futures using order flow, so I know a little bit about it. Looking at order footprint candles and all that kind of stuff, Renko footprint, and all that. So I used to use volume, market profile. I still use market profile now. I still feel like that is a good charting tool to use. Obviously not a lot of people have access to volume, and obviously volume depends on, I guess, where you're trading as well. So I think market profile is a good alternative, and I still use that from a day to day. But yeah, I mean, I've dabbled in both. I would say probably transitioned a little bit more as to a swing trader over the past few years, just because it kind of, I just felt like it gave me a little bit more peace versus day trading. But I can certainly day trade for sure. I mean, yesterday, the day before, I was trading euro dollar, day trading again, and I think I had 10 trades.
10 trades?
10 trades, 10 winners.
Oh yeah.
And then just kind of just call it a day. Then I was like, right, I don't need to do anymore. But I think it demands so much from you. It demands so much attention that it can be hard to do other things, and or at least it can consume what you're doing, and then you forget about doing the other things that you were meant to do. So I fell into that trap a little bit. So I kind of transitioned into swing trading, which just felt a little bit right for me at the time. I'd love to go back into day trading. I think I just need my pot to be much bigger for me to really get into it. So yeah.
I mean, that's really, when I'm also trying to trade Bitcoin, Ethereum on the higher time frame, I feel it's much peaceful. But that the same thing if I try to do with gold and NQ, man, it's really tough because Trump says something, and from last 2 days at 10 a.m. it's really horrible. He says something and it blows the count. The whole future space, it's really scared. I think they are not trading at the 10 a.m. because consistent spikes at 10 a.m. because of the tweets and stuff. Let's see what we have today.
Difficult trading conditions. I mean, I remember the first time he was around in 2016, and that was difficult trading conditions then. And if anything, it's probably got a little bit worse now. So he tends to tweet a lot more these days and has a lot more to say.
Yeah.
And obviously, in his first round in 2016, he didn't start a war, and this time he has. So there's just a lot going on in terms of that. I think that's when risk management really comes into play. I mean, for me, when I am day trading, at least I will make sure that I'm not over leveraging myself. I'm not over risking on anything whatsoever. I'm making sure that I'm using sort of tighter stop. Well, not necessarily tighter stops, but just less risk, and just giving myself a bit more room to breathe. So, in these type of conditions, instead of like trying to trade with like a 1% risk or the standard 1-2% risk per trade, it's kind of lowering that to at least 0.25% risk. And then especially when day trading, I like to then, if I do make a profit on the first couple of trades, then at least I've got that profit to work with. So at the end of the day, if I do kind of lose, I'll only be break even on the day, which is not necessarily a bad place to be in. So I like to use market profile to kind of find some levels and stuff. I'm just looking at the market profile here on Bitcoin. Just looking at a CFD of Bitcoin at the moment. So just looking at the sort of consolidation that we had up towards that higher area of the range. And we can see that obviously price has broken into value off the back of that CPI news. We've got the point of control, which is around about that 64.10 handle at the moment. So I've just set an alert there. I'm going to see if price can come back into this level, reject it on a lower time frame, see if we can get maybe a little bit of a short-term short going here. If it breaks through that, then next point of interest for me is probably going to be the value area high and of these highs here. And that's probably leaning more towards what Jonathan was looking at in terms of a bit of a false breakout to the upside. But, momentum like this today is probably, pretty easy to look at that and say, oh, I want to be on the buy side, right? Because I think a lot of people would look at that and go, well, how can I short that move, right? The market is just blazing higher. And I think this is where, being patient really pays. You don't need to try and jump in on a long here, because if you are, where you're putting your stop loss, minimum it needs to be down there. So your reward to risk is gone. So I'm looking at this thinking, well, I'd rather be on the short side. Where's my safe stop? It's up here, pretty much above those swing highs all around through this area here. If that's the case, I want to try and see price get closer to that area first before trying to take a trade. So I'm just kind of keeping an eye on it. We'll see where it is. I've set an alert in place. We'll see if we can get up there. Just have a look at current day's profile.
And guys, we have 19 people watching. If you guys have any question for Jonathan, make sure to drop that in the chat to maybe.
I did see earlier someone put a Brummy ? And the answer to that is yes. So if you don't know what that means I'm from Birmingham. I actually didn't think my accent was that strong until I started to come onto the streams. And then everyone just immediately knew that I was from Birmingham. So I was like, oh, that's fantastic. I thought I had kind of got rid of that part of my accent, but clearly not. So yeah. But yeah, I like this little move that's happening at the moment. Looking at the current day's kind of profile, obviously all the volume's been accumulated down below. So got a couple of options here. I think if we can try and get short around that point of control, might get back down to value maybe. Or if you want to be on the buy side, then at least you've got some clear structure here to work with. You've got maybe all this area down there, all that accumulation that can be potentially where you want to be buying from. And that again can give you a nice healthy sort of reward to risk ratio at that point. So yeah, I mean, I like the idea of being on the short side. It's whether that sustains. We'll have to keep an eye on it. See if any more news comes up, because obviously 3 o'clock we've got Ayush testifying. So whether anything he says there can see a big move, we'll have to wait and see. And obviously, with Trump about, I guess, have you been trading Bitcoin around sort of I guess Trump's tweets and stuff, has it had a big impact on the Bitcoin market? Because I don't think I've been necessarily watching Bitcoin whilst he's been tweeting.
I mean, it mainly impacts more on the NQ and the gold side. I have not seen any much more, spikes when he says something. It's mainly when it's about the crypto news. So yeah, so I'm not really scared of his tweets if I'm trading crypto. It's more of like the indices and stuff. So yeah. No, and I like the idea, like the way you you marked out the volume profile on the lower time frame, like prices coming back to the range and stuff. Because I also like to target the range because they act as an easy magnet. The only thing is comes down to the risk to reward the trader is using. So I want to know, like, what's your take on the risk to reward? Because you just see on the internet people trading 1:10 and 1:5 and stuff. What is a comfortable risk to reward which you always target as a day trader and as a swing trader?
It's a good question. I mean, first of all, I think it comes down to your data. And I don't think traders look at their own data enough. I think because, again, you're so consumed by what's happening now, you forget to do the review process after, or they send it off to a third party and then still don't review it. So first of all, I think it comes down to sort of like looking at your average win rate and kind of trying to develop from the back of that, a comfortable reward to risk profile for yourself. I usually, if I'm day trading, I'm trying to target at least 1.5 to 1. And I'll always try and leave a runner on to see if it can get more than that. If it doesn't, then that's fine. If it does, then great. But yeah, I'm always trying to have my reward larger than my risk, because if I do that long enough, then I will still come out of the day, well, maybe not come out of the day successful, but at least over the weeks, months, year, I'll come out successful. I think it's really easy for traders to go for the other side of that, where they kind of risk one, maybe try and target 0.5 or things like that. And obviously your win rate goes up because it's obvious the market's got to move less for you to gain out of it. But I only think that really works if you can be consistent and you can consistently not move that initial stop loss. And not let your emotions kind of take over. So I think, again, I would always kind of look at your data. What's your data telling you? Can you survive? What's your expectancy if you are using a different type of win rate or different type of risk reward ratios? And with AI these days, it's super easy to do. You can literally download your data, plug it into AI and review yourself. So I actually do this a lot for traders. They send me their data and then I review what they're doing, but I literally just plug their sort of data into AI, say, what are the trends of this trader? What are they doing? What are the things that they are bad at? What are the things that they're good at? And I think that is a big tool that can help you now. And it will give you suggestions of what's best for you. So yeah, I think for me it just comes down to your personality. What are you most comfortable with? There are traders out there that try and target like 10 to 1s, but you probably haven't seen the 9 losses prior to that to get that 10 to 1 trade. Whereas I'm a big believer of just dip your toe in first, get a little position going. Don't have to go full whack straight away. Just get a little position going. If it starts moving in your favor, okay, great. Can I add into that position? Keep the same stop loss where it is and just try and build on it. And that's what I try and do, most of the time, is try and find, get my toe in where I think that price is going to do something. Because then if I take one loss and it's only 0.25%, I'm not really going to beat myself up about it. If I have think about these traders on prop accounts and things like that. Imagine you've just bought an evaluation or whatever, and next thing you know, you've done full risk on a trade trying to pass it the next day, and you've just lost it straight away. You'll be gutted. So I always think it's better to just try little trades first, then try and build into it.
Exactly. I mean, when people are very new to the markets, and what they see in the beginning is big wins on the social media, and that's what I tried for a year. It's like targeting 1:, maybe 20 or 30, just one trade, and I'm gonna be a millionaire, and that never happened. So after a year, I sat down and started reading my data. Okay, what I did for a year and the risk to reward and stuff, and I switched from 1:10 and stuff directly to 1:1, and then really played out well, because the data says that if I'm taking 1:5 out of 10, 60 or 50% of time I get what I'm risking in few minutes. But then I realized that why don't I take that and just try to build a buffer and try to make it work as a scalper on the lower time frame, and it did work. Even if I have a really bad, let's say I have 50% risk reward or maybe 60, that really works well on the future side, on the crypto side as well. So like for me, it's more of like base hits and then done for the day, not really hoping too much from the market. But I always hope that, there are enough chances for me to survive in this market rather than just waiting for one home run and then doing nothing.
No, I prefer that. I think people underestimate what they can do in a year versus what they can do in a week. And I think the industry is built on trying to get those big wins and stuff. But you can do a lot of good with small winners as well, and even on small losers. I mean, I went through a little bit of training with a hedge fund guy before, and he copied my trades for like 3 months.
Mm-hmm.
So he'd copy my exact entry, stop loss, and targets, but he would manage it differently to me. And what he would do at the end of each week is reveal how much he made versus how much I made. And it was embarrassing how little I made versus this guy using my entries and take profits and stop losses. And it really just kind of like opened my eyes up to the fact that, you have to, one, keep your eyes on the conditions of the market and don't get nailed to that, that stop and target, because, I've been in situations in the past where I've been so kind of, focused on the narrative of that trade that I've ignored all the signs of it changing conditions, and then it just goes. And I'm like, crap, like, I could have closed that with like 2 3-to-1 profits and things like that, versus it letting it come all the way back to break even or whatever. So I think for a lot of traders, one, they get married to the take profit and stuff, and they don't need to. They should just be eyeing up the conditions of each market. I always ask myself, when you look at a trade and it's in profit or whatever, or it's in loss, I ask myself the question, has the condition changed? I don't ask, am I in a losing position or am I in a profitable position? I just say, has the conditions changed? And if they have, I do something about it. If it hasn't, I stick with it. And for me, that's worked out pretty well. So I try and make sure I stick to that at least.
I mean, that's what mainly we ignore in the beginning, and then feels like shit when we realize that the only thing we had to do is just lower the greed in order to survive for longer in the market. And so are you trading any props account? Because I'm totally a prop trader, and I just wanted to know how you play with the prop side and the live account and stuff.
Yeah, I actually I just saw that question actually. How many failed evaluations have you got to date? And honestly, 0. So and that's not me to say that I've traded loads of prop accounts either, because I haven't. So I actually had one prop account. I actually just tried my own live capital, but I had one prop account. I won't name names of who this prop account was with, but I was doing really well on it, and I wasn't say really well. You know, it wasn't one of those where like I'd had it a week and whatever. I had this account for like 6 months, and I was doing really well on it. And one day I accidentally put a dollar Swiss buy in when I wanted to short it. And I realized my mistake immediately and was like, oh, what an idiot, get rid of that, cut that trade. And then immediately went on to take the right position. And then they blocked my account saying that I was, trading aggressively or something. And I was like, what the, look at the last 6 months of performance. Have I ever done that? No. Oh, still, you've gone and violated your rights, whatever. So for me, that was like a line in the sand for me to kind of just, I'm going to stick to my own capital for now. Will I go back and do evaluations? Yeah, sure. I'd go through and do prop accounts and things like that. But for now, I just use my own capital and just trade that.
Yeah, I like that. I remember we had a. By the way, hi, hello everyone.
Sorry,
hello. I was supposed to have an interview, but no one showed up, so it was a rather boring, very easy interview.
Well, at least you got some quiet time for like 20 minutes, right?
Yeah, right. I was just sitting there. Maybe I could grab a coffee. It's not Is this? Am I getting paid for this? I think I am. Yeah, I'm waiting for someone. That's also part of the job, I guess. You just pulled up. Not that it has anything to do with anything we talked about here, or I don't even think you can trade IBM Tradeify crypto, but it's down 20% pre-market, which is a bit insane. 22% now, 21%. Yeah. My screen share is coming up. So now why do we care about this? Well, because IBM is one of the one of the players within the AI race, right? It's been one of the beneficiaries of AI related investments. I can't remember what happened here, but it was some investment, data centers, something like that, maybe OpenAI, whatever. It went up 56% from 13th of May till the 2nd of June. And now it had its earnings report coming out today. And they're saying that they're experiencing weakness in the software and infrastructure business, which is interesting. So we'll see if we can have more companies within this space showing similar developments. That might be, might be a sign that the infrastructure and the data center investments might be taking a little pause here, because we've all seen it's just been absolutely insane, the amount of money that's been circulating within a handful of company within the space. It's been crazy. So yeah, interesting to see what happens there. I heard someone ringing the bell. Was that you, Ayush?
No, someone from my background. It's kids outside the house.
Okay.
I like this. We should get a bell, actually. I like that. I like that idea.
Yeah,
Jonathan has
that's
one.
a good.
Does that thing with the?
I have this one. Yeah. I got this one. I bought this one because I thought I was going to use it when I'm meditating, but I'm never meditating, so I'm not using it. But this one is amazing. Listen. But then your sibling was screaming in the background as well. It's a perfect mix, like trying to be harmonic with this one, and then you got your siblings screaming like they're killing each other in the background. It's a good mix. Mix of emotions. How old are, like, how many people do you have in your household, Ayush?
Not in my house.
Like, how many?
Yeah, they're my neighbors. There are only 4 people.
Oh shit, there's your neighbors. Oh
Yeah.
wow, okay. Tell them that you're a crypto trader, man. You can't take this.
Don't care.
You know, I'm too good. I'm too good for this. I'm a funded trader. Tell them that. Hey, little girl, I'm a funded trader. Do you have any idea what that means?
They think that I play games because of the setup.
That's pretty much what we do, isn't it? And this is, you know, yeah. I wanted to ask you. I think it would be good to someday have a. Wait a minute. Luna says that her internet is so bad today, I'm gonna cry. Maybe that rules out Portugal. How bad internet do they have in Portugal? Quality of internet in Portugal. Let's see.
I want to get everyone involved in that. I want everyone in the comments to guess where Luna's from.
Okay, according to AI, Portugal boasts world-class internet, ranking among the top countries globally for fixed broadband speeds. Okay, Luna, do you have cellular? Like, do you have broadband connection?
Honestly, take me to Portugal.
Honestly, what?
Take me to Portugal.
Yeah. Well, we have pretty good internet here as well. UK should have good internet, no?
Yeah, we do. I'm just thinking more
yeah.
about the weather. You know, all year round. It's not. The weather's not great over here. We have like, you know, at the moment it's boiling hot, which is nice. But you know, at least it gets me out of the house, golfing and all that kind of stuff. But
nice.
Yeah, at the moment it's once it turns, you know, September onwards, it gets horrible. Yeah, it's absolutely horrible here. So Portugal might be the answer for me. High-speed internet.
Yeah, you know,
it's sun all year round.
Yeah, I like summer. I like sun, and then, you know, I live in a country where it's like 3 months of good weather. You know. Yeah. Okay, Luna says again, my internet is so bad today, I'm gonna cry. She's really like, she's really good at dodging the questions here. Like,
Yeah.
she's not even changing subjects. She's just not part of that conversation at all.
It's down to us. It's down to us to just keep guessing and just assuming.
Yeah. Yeah. We get free account to whoever. Nah, I can't do that. Glenn says East European. Maybe East European living in Portugal. It could be. Yes. Okay. So I wanted to ask you before I saw the Luna comment. By the way, we have Glenn as well. I'm in contact with Glenn in email. I'm sorry, Glenn, for not answering your email. I completely forgot about that. We're hopefully gonna bring Glenn on. As the first community member to be taking on the live shows. That's going to be really exciting to have a conversation with a normal person. It's going to be fun. Looking forward to that. Okay. Yes. Okay. Back to the question that I've tried to ask you 4 times. And again, I see a comment and I have to pause myself. Jesse P, no, you cannot come on the live stream. Absolutely not. I've already banned you once. I don't think you're a normal person. I don't want you on the live stream. I do, however, really appreciate your engagement in the comments. I like that. But on the live stream, you're a security risk. You're a security risk. I have no idea what you're going to say. You're probably going to say stuff that's going to have the YouTube team reach out to us. And we don't want that. So, no, Glenn is much more civilized. We want Glenn on. Gonna bring you along. Maybe if we go on Kick, like do a Kick live stream, we can get you on, Jesse P. Okay, cool. Jonathan, I wanted to ask you the yields, the bond yields for some of our viewers. It's they're completely new to the bond market, to government bonds, to the yields. Could you just explain what they are, simply, and why you think it matters?
To me,
yeah. So government bonds are debt that the government auctions off for them to borrow capital, basically. So you know how we would go to a bank to borrow capital, and the bank is the lender. Essentially, we become the lender to the government, right? And people buy government debt because it is seen as a safe investment because it's backed by a government. A government's not necessarily going to go. When I say it's not going to go bust, obviously we've seen countries go bust in the past, so but it's unlikely that, like the US, for instance, is going to go bust. So you'll see the likes of hedge funds and things like that really invest, and private equity invest into government bonds because it gives them a guaranteed return. Now you've got like the 2-year, the 10-year, the 30-year. You've got basically, they're just different maturities of your bond. So if you were to buy 2-year government bond yields right now, you're looking at 4.2% return annually, versus sort of the 10-year, which is like 4.5%, and then you've got the 30-year, which is 5%. And the reason why the 10-year and the 30-year have higher interest rates is because you're parking your capital there for longer. So you want to be getting a better return the longer you hold your capital with them, right? So essentially, the reason why the market kind of reacts to this is because it's all to do with that yield that you get. If interest rates go up, the yield is higher. So you will see an investment into the US dollar because people are exchanging their currency into US dollars to buy government-backed bonds. So when you see like the likes of the 2-year rally, it means that there is an expectations of a short-term sort of maybe interest rate hikes. So people are really interested in holding their money for a short period of time. If there's, let's say, what they call like an inversion in the curve, which is basically when 2-year yields outpace the 10-year or the 30-year yields, that's usually because there is more of a sort of say recession fears around. It's just basically more that people are invested more in the short term than the long term, so they are happy to trade and buy 2-year bonds versus the sort of 10, 20, 30-year olds because they have more confidence in the here and now versus the long term. And if you look across sort of most, especially developed countries' bonds, they can have a large impact on what's going on with their currency. So yeah, essentially bonds are just government debt that the government sells for you to buy. They, interestingly enough, actually, they weren't necessarily available for retail clients in a way, but now they are. I think recently they've actually reduced how much it is to buy bonds now, which is quite interesting to see. I have to dig up the report of that to be 100% sure of what that is, but I saw that recently. So yeah, that's what they are in simple terms. Yeah. It's just government debt, but obviously, if they move higher, let's say the 2-year right now has been moving higher since sort of April time, the US dollar has tracked with that. It's because people are investing into the US dollar and they're investing into these bonds because they're going to get a higher yield for their money. But if they drop, they're going to go try and seek the yield elsewhere, basically. Is there another central bank that's hiking interest rates? Is there, what is the spreads doing across different other markets? So like, recently the Reserve Bank of Australia have been hiking interest rates over, let's say, the New Zealand dollar, right? Who were actually cutting interest rates. And if you look at the Aussie Kiwi trend, that market has just basically gone in a straight line to the upside. We're starting to see that turn now, because we're actually seeing the RBNZ coming out and thinking about hiking interest rates, whereas the RBA feel like they are restrictive enough, so they are pretty neutral. So we're starting to see this move down because of that. So bonds play an important role. Central banks' expectations play a very important role in what happens in sort of global markets. It's like the machine. The bond yields are part of the machine, the cogs of the financial market. And that's the way I like to think of the financial market. It's not necessarily one thing impacts another. It's almost like there's all kind of like cogs in this. I keep calling it the cogs in the machine. If I say that again, just slap me. But that will, that essentially is what it is. There's all these different drivers, and sometimes one can be larger than the other. For instance, if the geopolitical issues are driving markets and that's the narrative the market is focusing on, that's what you need to focus on the most. But yeah, it all really comes back to bonds for sure.
And why? It's very interesting, because I through my research and what I'm looking at, it's definitely my understanding that like you said, the bond market is one of those major movers of, or major impactor of the market and sentiment. And just to kind of bring us back to the very basics, when we say that government bonds is basically debt, it pretty much means that you're loaning out money to the US government, and then you're getting that money back with interest. Mm-hmm. And then the US government can take that money and invest it into whatever it wants. It's also one way of funding infrastructure. For example, you could be selling a ton of let's say you're selling 2-year or 10-year government bonds, and then the US government can take that money, invest it into infrastructure, and then pay it back with an interest. And also, I feel like what's interesting about the bond market is the fact that it's basically risk-free if you're looking at the US government, because it's issued by the US government, and it's guaranteed by the full force and security of the US government, which basically means that as long as the US government is as long as it's that the American civilization is not gonna disappear overnight, you're gonna get your money most likely. So it's very secure type of investment. And as far as I understand, that's the risk-free rate, right? That's what all the other assets are priced against. So if you're going to measure, for example, your alpha in a portfolio, and basically what alpha is the excess return above the benchmark. And the benchmark a lot of times is going to be the S&P 500 minus the risk-free rate. And then that's everything you make above that, that's going to be your alpha. Another thing I find fascinating about the bond market is you kind of start to understand why institutions and hedge funds and like big family offices are looking at the bond market, because you can basically make, 2 to 3% return on your capital a year with no risk. And if you have hundreds of millions in capital, that's very interesting, because at that level, it doesn't matter how much money you make. It's about how much money you're not losing. So in that perspective, having bonds in a portfolio does make a lot of sense when you get to that level. And as far as institutions, a lot of times when we exit the market as investors, we go into cash, myself, I go into my local currency. I go into Swedish kroner. If you're in the US, you probably go into the dollar. Now, the dollar can fluctuate quite a lot, and we've seen this a couple of years ago. If we look at Euro USD, you can go to the weekly. Or better yet, you can just look at USD versus the Swedish krona here, where I was getting paid in dollars here, right? I was getting paid in dollars and it fluctuated, right? But when you get paid in dollar here, and then you get paid in dollar here, the difference in your salary is minus 20%. So you lose 20% on your salary. It's the same with if you look at USD, GBP USD. It has some insane fluctuations, right? So if you got paid in USD here, you know, your salary is down 30% versus the British pound. But if you put that money in government bonds as well, yes, the reward is going to be in dollar, and that might fluctuate. But correct me if I'm wrong, it's potentially a safer way to park your capital, isn't it? Or is that going to be based on the exchange rate as well?
Yeah, because you're still going to have to buy government bonds in dollars. So,
right, of course.
Yeah. So
and you're getting paid in
that's
dollars
why a lot
as
of
well.
central banks do it as well. So like that's why they always talk about, you know, the interventions and stuff when it comes to the Bank of Japan. What they're basically doing in that situation is buying their own bonds and selling other bonds, right? So they're selling the US bonds back to the US government a ridiculous amount so that it forces the exchange rate to change. So that's what they're basically doing with that. Sorry, I'm just keeping one eye on Bitcoin here as well, because I've seen that we've come up into point of control of this whole sort of accumulation here. So I'm just seeing if we get like a little bit of a break. If we do, I might short it down to these kind of 63s. So I'm just keeping an eye on that as well. But yeah, essentially, it's very difficult if you are getting paid in a foreign currency, because you will get impacted by the exchange rate, essentially, the overnight charge on the market. So you can
that's so it's difficult. I mean how do you hedge that? Because if you're buying the 2 year, right, and you, let's say you're okay, so you're going to get 2% per year, but obviously the US dollar can move 2% per year, so you can basically erase all of that. So you would want to look at, you know, hedging that, and then I'm trying to understand, like, what's the purpose of having large capital within the bond market? Is it, I would guess you would have to hedge the currency fluctuations, and then if you can hedge the currency fluctuations, then you'll actually make that profit on the bond yield, right?
Yeah, so it's a kind of a weird game, isn't it, hedging? Because you are trying to essentially prevent you losing too much, but you hedge to avoid that kind of, you know, risk, I guess. I'm not fully across why, I guess, you know, they do that. I know that obviously for Japan's sake, a lot of these countries deal with each other, you know, and America is probably the largest business, and I know Japan buy a lot of energy from the likes of the US and stuff, so they probably own a lot of government bonds or own a lot of US dollars to transact with the US on that front. They can obviously then come in and try and, you know, if their currency is getting too weak against the US dollar, then essentially it costs them way more to buy US dollars as well, and to transact with the US. So they will try and come in and hedge that and intervene and try and make the currency fluctuations a little bit better. So there's probably lots of different reasons why they do certain things. To give a full breakdown, I'd have to do a little bit more research on that front. But yeah, I mean,
I'd love to have a presentation. Maybe we can work on that. Have it maybe next week to do a presentation, and then I'll be here as well, asking questions, because there's a lot of things I want to know about this as well. We could definitely do a presentation where we break down, kind of go depth into government bonds and the yield curve and the yield spreads, and how we can use that in our trading. I think that could be quite interesting.
Yeah, for sure. Yeah, we'll sort that out. We'll sort that out.
Too much to learn.
I mean, if we have because the yield spread is interesting, right? Because I have a chart here of the US 10-year and the Japanese 10-year, and then what's interesting about this is if you guys don't think if you don't think it matters, you can just pull up the weekly here, and you can invert this one. So hold down Alt I, and then we can add USD/JPY to this, and you can see why it matters, because this is the yield spread between the US 10-year government bonds and the 10-year Japanese government bonds, and you can clearly see how the price of USD/JPY and the bond yield, or the yield spread, is very much moving in correlation most of the time.
Yeah, if you look at the correlation between the US 10-year and dollar yen, it's pretty spot on, to be fair. And that's because Japan are the biggest holders of US government debt. So the dollar has a big impact on their market. So yeah, we can break that down one day. Get into the finer details, the granular details, for sure.
Yeah, because from there's a lot of things we can. Okay, this is an inverted chart. I got confused here. I pull up Bitcoin. I'm like, that has to look right.
Yeah, I always, when I'm looking at yen futures, sometimes I get a bit. I'm like, hang on a minute, it's inverted. It's different.
Because we got a nice rejection here on Bitcoin at 64K. Are you thinking like a break below like 63.5 to go short?
Yeah, I'm looking, around about that 63. I've got it at 63.60 on my chart, but it's probably around a similar area. We've got this almost like head and shoulders pattern on I dare say, 1 minute chart at the moment. So, if we do see kind of like a breakdown through here, I might be tempted just to take a small short, see if we can kind of break down towards the opening range of today, really, sort of 62s, 86s. Whether we get down there, we'll have to wait and see. We do have a couple of support resistance levels in the way, so 63.35s, which is the sort of value area low of that kind of area as well. So to keep an eye on that. We've obviously got some sort of accumulation levels down through this area here too. So, if we are going to kind of trade down to these levels, I always try and look for kind of, first point of support or resistance, want to try and take some cash off, and then see if we can kind of trade down to these points. So a quick look at a 5 minute.
Yeah, that's a very clear top structure here, actually, on lower time frames. Just like you said, if you look at the If you look at the 1 minute there, and then you kind of go out from the 1 minute all the way up to the 15 minute, you kind of start to get a sense of how it's made its move basically. And I think the mean reverting mechanics will be kicking in here shortly.
And the candles are made from the CPI, so I think it will go to data low. So I'm assuming that it will go back to the range again at 60 to 500 for intraday trades. So yeah, I'm also waiting
it's very
for
possible. Yeah, makes sense. See if we can get that. Ethereum though, I mean, if Bitcoin is going down there, Ethereum is probably going to go down as well, and I think Ethereum is good. I think Ethereum is actually good short for to hold a little bit longer. I don't think we're going to see Ethereum above. I mean, the risk to reward here is fairly good with having a good stop loss. I don't think we're going to be seeing Ethereum above 2K for a long time. And maybe. I mean, Bitcoin and crypto was in the bear market way before Kevin Warsh. Like way before Kevin Warsh came out and say, "Hey, we're gonna hike rates." You know, is a shift in rate hike expectations really going to change the whole market structure of crypto? I don't think so. Like we're in the bear market way before Iran situation as well. So there needs to be some serious developments, I believe, for crypto to all of a sudden start bottoming out here. So I think I might be wrong on Bitcoin. I mean, I might be wrong on Ethereum here, but I might be wrong with the entry. But I'm not. I don't think I'm wrong with direction. You know, I might get stopped out here, but I think eventually, if we look back at this in 1 month from now, right? I think we're going to be trading lower.
Don't you think that Ethereum is too strong for shorts than Bitcoin on the high time frame?
Say that again.
Don't you think Ethereum is too strong for shorts
on the higher time frames?
Yeah, I mean, I feel Ethereum would not perform really well in the bear market. I mean, in the bear trend, not market.
Well, Ethereum is a bit weird because it's not really in a bear trend. It's in a range. It's been in a range since 2021, pretty much. I mean, yes, you have this type. If you strip out this price action, you're basically in a high time frame range since the beginning of 2021. So if you look at this as a deviation below the range lows, and you're now within the range and testing range lows again, this is like a multi-year range. And it's weird because like, why is that happening while the rest of the market is in a very clear downtrend? So yeah, I mean, it makes sense, but I think the chances are that we're probably going to be seeing something like this, maybe not break down to 1K, more consolidate maybe around these levels. But I mean, I think Bitcoin's going lower. I think Bitcoin is not going to put in a high time frame bottom until October, November this year. And of course, Ethereum, it's almost like, it's not impossible, but imagine if Ethereum breaks out and Bitcoin, like that's not going to happen. It's just that's not going to happen. So I look at Bitcoin. Can Bitcoin, can Bitcoin break out here? Yeah, Bitcoin can break out, and like we've covered so many times before, Bitcoin in the bear market actually trends up more than it trends down. And what I mean by that is, if you the secondary uptrends are much longer in length compared to the moves to the downside. So they're almost like twice or 3 times as long, which means you're going to be trading upwards on the local structure more often than downwards in a Bitcoin bear market, which is a lot of times that's what markets do. But it's very obvious in Bitcoin. So I'm thinking, can we have a sustained uptrend all the way up to like 72 and still be in a bear market? It's absolutely possible. If we get that, then probably Ethereum is going to be like at 2.3, 2.4. And at that point, fantastic shorting opportunity, because then we're talking about, we're talking about a 2 to 3 hour trade that I would view as just obvious, Same thing in Bitcoin. But it's difficult because I want to take a trade, but there's just no, it's not screaming at me, Like here, when we took this trade, which was just, to me, very obvious, that was a screaming short, that was just, okay, it was a screaming short me. And I'm not really feeling that right now. Even if we add like a trend line here, it's still, I don't know what type of trend line this is, but it's still kind of to get a sense of where we are in terms of this channel. Let's see if we can make something out of this. I mean, but let's see if we can use that channel. What is it called? Linear regression channel. And then if we go back, let's see, 400. Where's 400, and then we removed log scale. Give me a second here. So if we look at the channel here, this is the linear regression channel. It's basically just putting a best fit line through price action and then adding 2 standard deviations above and below. We are, when we shorted last time, we were closest to the upper areas. We are now in the middle of this channel. So the if you want to generate alpha in a trend like this, you want to be looking at entering close to the second standard deviation, because if this is a trend, then you want to get in on the extremes of the trend to ride that trend and ride the trend with the idea of it's mean reverting in the mean of the trend, which is this line right here. So looking at this, I mean, imagine if Bitcoin goes up to 72K next week. I think you would be stupid not to short it.
Yeah.
Mm-hmm.
So when I'm looking at this, I'm like, I have to accept the fact that maybe the next trade on Bitcoin for me is going to be in 30 days. Which is just like, if I'm going to be trading Bitcoin, then that's going to be difficult for me, because then I'll have to wait a whole month to take a trade. But, money's not made, I'd like to say, that money in trading is made by not trading, which is weird to say, but the best traders, they make money when there's a really good setup, not because they're trading often,
Absolutely.
So, but then of course we have to differentiate between what's the type of trading that I'm looking at here, which is longer term swing trading and actual intraday trading. And if we then again go back and we look at Bitcoin from more of an intraday perspective, I'd like to look at this whole area here as It's like a vacuum in price. There's like a gap, or call it imbalance or whatever. It feels like there's just an area on the chart that needs to get filled for there to be, equilibrium or whatever.
Yeah, I'm still watching that little head and shoulders. It still hasn't completed yet on the hourly chart. Still just kind of on the hourly chart, sorry, minute chart. Waiting for it to kind of give me a sustained close below this area, so then I can look for a bit of a retest. We are starting to just shot back and forth a little bit. So yeah, just gonna watch that. If we do get that breakout, then happy to look for the short. I did put a short on, but it was a sell stop at this yellow line here. Didn't get triggered, so close that out. Just gonna wait to see if we get that confirmation first before we get it going.
It looks a little bit too obvious though, especially with War's press conference. Not the press conference, but the hearing. I think it's like it's I mean, it's literally starting like now, which is like, okay, markets usually don't move right before an event like that.
Mm-hmm. No, yeah, that would definitely be waiting.
Yeah. All right, guys. Looks like we're coming up to the end of the live stream here today, and I have a meeting I need to jump on right here when we end. Let me know, guys, in the comment section if you're watching this as a replay as well. Make sure to leave a comment in the comment section. If you're in the Discord, you can tag Ayush, which is very active in there, and let us know, what do you want us to cover this week in the live stream and tomorrow. If you want just more live trading, just looking at maybe the 1 second chart, tell us that and we might consider it. If you want to look at more of the macro picture, talk a little bit about yields and some of the macro forces that is driving the markets and might affect the crypto markets as well, let us know in the comment section. I know I would be very interested in that. So yeah, let's let us know, and we'll see you all tomorrow. And thank you, Ayush and Jonathan.
Yeah, thanks for having me.
Thank you so much.
Our very, very first session today. It's been lovely, and I'll see you guys tomorrow.
Yeah.
See ya.
All
right. Thank you.
Bye-bye.